Good day to all. This will be our discussions involving the risk management process, and this is basically our first part or portion. For this particular videos, we are going to discuss as to how we are going to manage risk step by step. So let's have a review about what risk management process is. It basically consists of a series of steps that, when undertaken in sequence, enable continual improvement in decision making. Let us dissect the definition by looking into the fact that if we say process, we are looking into step-by-step procedure. So basically, we have to follow the order or sequence. Otherwise, we will not be able to arrive at our desired output. Please also take note that our target here is to have continuous improvement, and basically, whether we like it or not, there would always be improvements along the way. And this is with respect to decision making. Now, here are our steps. So first is communicate and consult, then followed by the subsequent steps that we are going to dissect each in the slides as we go along the way. Now, we have to take note that it begins with communication and consultation with a certain expert or specialist in the field, and whoever is in charge with the governance would look into the management of risks. We establish the context for next because we have to know the respective unique characteristics and certain nature of the business that we have to look into about such risks or the accounts and the company or industry to which it belongs to. We identify such risk, analyze, then evaluate so that we can properly treat that, and we have to monitor and review our efforts. So this is our diagram as to the flow in a flow chart form, starting with communicate and consult, and then we are going to establish the context with respect to the entity, the risk, again, the industry to which it involves itself with or is immersed with. And then we are going to look into the risks. We have to identify, analyze, evaluate, then treat, then monitor and review. So basically, it's a cycle that would continue as we go along the way. Now we have to look into the steps now, and starting with communicate and consult. This is very important because this is the beginning. So communication and consultation aims to identify who should be involved in assessment of the risk, including identification, analysis, and evaluation. So in the risk assessment, the three most important parts at the middle, and it should engage those who will be involved in the treatment, monitoring, and review of risk. By this definition, we are looking into as to the people composing this risk management process. Then in step one, it or the communication and consultation will be reflected in each of the steps of the process described here. Whether we like it or not, we have to communicate with people who will be involved in this process. And as an initial or first step, there are two main aspects that we have to properly establish in order to be able to establish also the requirements for the remainder of the process. And we have to identify them. These are the communication and consultation aspects that we have to look into. Eliciting risk information, we need to gather the information, we need to collect, and we need to know about what causes the risks, what risks there are in the business, again, the industry and the entity, then the accounts being involved. So for example, some account or account titles are more susceptible to risks than the other, and some entities are more susceptible to certain risks than the others. Letter B, managing stakeholder perceptions for management of risk. Remember, in the organization or business, there are certain stakeholders that have their needs which are needed and which are, of course, in accordance to the organization. So their perceptions and how to manage such also in accordance or aligned with the management of risk. For eliciting, remember that in this point in time or at this point in time, communication and consultation may occur within or between the organization and its stakeholders. It is very rare that only one person will know everything, will hold the information needed to identify the risks to a business or even to an activity or project. And we need to know We need to identify the range of stakeholders who will assist in making this information complete, which also goes to say that when we are going to get risk information, it's not just about those people at the top or the management, although they could be giving the needed information, but it's possible also that the stakeholders like the business partners, could be investors, stakeholders, could be the customers who or that are really doing business with the entity that we are, of course, looking into with respect to the risk management and the risk management process. And also we have to, let's say, consider our trade and other creditors, like for example, our suppliers or vendors for our raw materials and supplies, and also with, let's say, financial institutions like banks. So these are the lenders and many more. Those are just some examples. Then as such, communication again will be reflected in each step. We mentioned that a while ago, and it seemed that we are going back to such slides or parts. And to continue, we have managing stakeholder perceptions for management of risk. The business and the stakeholders, which are or who are basically shown here. They are of different groupings as what I've said or mentioned a while ago, because I based that to the groupings in financial accounting and reporting and conceptual framework and accounting standards. However, we're not saying that this is also, let's say, wrong or incorrect, but what we are saying is this is the right thing, still a right thing. So we have to take note that there could be many classifications as there are depending on the sources. And financial accounting and reporting is not wrong. It's also correct one. So we have to just delineate or know the lines that would separate one from the other, but doesn't mean they are not connected. So we just have to take note of that, especially that we're talking here about steps which are connected with each other. And of course, the success of one or failure of one step will lead to also the other steps. So that's why we have to ensure that we are okay or fine in one step. All right, moving on. So stakeholders could be internal and external. Internal literally within the business, and external would be outsiders. So we have here the ones that we have mentioned, like the community or public, the media, very important. So those who are into broadcasting and journalism, the government, of course, and regulatory agencies, one word, regulators, subcontractors who are providing services to the entity together with the contractors, then insurers, for example, for the insurance companies, both life and non-life, the staff, the employees. So for external, normally we have our clients or customers, contractors, suppliers, insurers, subcontractors, regulators, media. Oh, external, the community. So in blue, and in somewhere like pink or like light brown, internal stakeholders within the business. So to continue, we have the steps, or rather, we have the respective additional information for effective communication and consultation. Determine at the start or outset whether a communication strategy and or plan is required. This is something that we should know. Then another tip will be to determine the best method or media for communication and consultation. Of course, it's going to be a case-to-case basis. So how do we communicate? So is it going to be in a form of memo or letter like before, but with the onset of pandemic, of course, we have plenty of ways like online, but before even the pandemic, we have email. So there are many ways of communication, and also we can have video conferencing and video conferences for certain meetings. Now, the significance or complexity of the issue or activity in question can be used as a guide as to how much communication and consultation is required. This is very true. If there are certain things wherein we can just do by, let's say, not meeting at all, so even emails will be fine, or even chats would be fine. Like we have our GCs nowadays, or group chats, even by Messenger or Facebook. So if that can be done, why not? But we just have to take note. I like this rule. The more complex and significant to the organization, the more detailed and comprehensive the requirements. So it's possible really that face-to-face would be required for certain occasions. The more complex and significant such would be. Now, step 2 is to establish the context. And we also have sub-steps under step 2. This provides a 5-step process to assist with establishing the context within which risk will be identified. First is to establish the internal context. Second would be external. Then third would be the risk management. Fourth would be develop risk criteria and define the structure for risk analysis. And we are going to discuss them one by one. This is sub-step 1 under, of course, to establish the context. Internal context, of course, is within the company or business. As previously discussed, although it's not here on the slide, but let us just mention that the risk is the chance of something happening that will impact on objectives. Normally, risk is viewed negatively, chances of negative outcomes, although if we do not attempt and we do not actually solve some risks that are manageable, then we will not be able, of course, to attain more returns and benefits. So remember the risk and return trade-off, wherein we can basically, of course, see under that trade-off the linear or direct relationship between risks and returns. And this is something that you have known from your financial management subjects, that if we want higher returns, so we embrace higher risks. So we have to take note of that. And as such, the objectives and goals of a business, project, or activity must first be identified to ensure that all significant risks are understood. We have to know always that risks can be managed as a whole, can be decreased, diminished, lessened, or minimized. However, they cannot be fully eliminated in the process. This ensures that risk decisions always support the broader goals and objectives of the business. So certain risks will have to be managed in order to achieve the broader goals and, in fact, the objectives, which are now the specific items involving the goals of the business. This approach encourages long-term and strategic thinking. Okay, and in establishing the internal context, the business owner may also ask themselves the following questions. These are the very important questions. Is there an internal culture that needs to be considered? For example, are staff resistant to change? Is there a professional culture that might create unnecessary risks for the business? Is also one important thing that we have to consider or look into. Next is what staff groups are present, which is also one thing. So the staff, then prior one is about the resistance to change. I recall this is one chapter in management. So how do we solve that particular resistance to change? And would this create risk? Well, I would say that initially people would be resisting to change, most especially if the impact would be really on them. And let's say that the changes would be impacting them in much scale. And especially if that would involve the benefits, to be honest, financial benefits that they're going to receive. So in that case, we expect, but one area that can be looked into is how would the organization address those particular resistance and what solutions prior so that they can solve those particular resistance. So it has to be studied, of course. Then what capabilities does the business have in terms of people, systems, processes, equipment, and other resources? There's also one area that should be considered. Now, next is about external context, which is about the overall environment in which a business operates. And then this includes an understanding of the clients or customers' perceptions of the business. So those outside of the business. And we can, of course, do the SWOT analysis, strengths, weaknesses, opportunities, and threats to the business. in the external environment. Now, a business owner may ask the following questions when determining the external context about regulations and legislation that must be complied with by the business, then other requirements also that the business must comply with. What is the market within which the business operates? Who are the competitors? That's very important since market factors are normally beyond the control of the business, competitors and competition, of course, and other factors like social, cultural, or political issues. For external, that's it. Now, what are the tips for establishing internal and external context? Determine the significance of the activity in achieving the organization's goals and objectives. So what's the importance of this activity to the contribution of the fulfillment of the goals and objectives? What is the environment that the organization is operating? We have to know internal and external stakeholders, which are actually discussed already, and then determine their involvement in the risk management process. They can create also risk, and how can they help to manage the risk? Now, establish the risk management context. Before beginning a risk identification exercise or how to do the risk identification, we have to know the limits, objectives, and scope of the activity or issue under examination. These are the three important areas, the LOS, limits, objectives, and scope. For example, in conducting a risk analysis for a new project, example, introduction of a new piece of equipment or a new product line, it is important to clearly identify the parameters for this activity to ensure that all significant risks are identified. The last phrase, to ensure that all significant risks are identified, are basically, of course, let's just say, discussed prior. So remember, in knowing the risks at the start of this particular major step, which is establish the context, and this is the sub step number 3. So this is mentioned already, significant risks, because again, in the business, there could be risks, and some risks cannot be totally or clearly eliminated. We can only decrease them. And that's why, in order also to save energy, we only have to minimize the significant risks. Insignificant risks sometimes could be little, but if you are going to attempt to eliminate them, the cost will be higher than the benefit. So that's why normally organizations would not attempt or exert any effort at all to eliminate them if ever they can be. So we have to know the parameters. We have to know the limits, objectives, and scope. Tips for establishing also, and then this time, this would be the risk management context. So we have to define the objectives of the activity, task, or function. That's okay. Now we have to know the legislation, the laws, the regulations, policies, standards, and operating procedures that need to be complied with. So compliance here is the key and the concern. By the way, the slides could be moving back and forth, so hopefully you're still following. Then decide on the depth of analysis required and allocate resources accordingly. This is now all about the analysis and allocation of the resources. And the fourth one would be the output of the process. For example, risk assessment, the job safety analysis, and the board presentation. Then output, we have to take note that it will determine the most appropriate structure and type of documentation. Well, the output will really dictate as to the respective items that will have to be considered overall. Then the fourth one is develop risk criteria or standards or benchmarks. Risk criteria allow business to clearly define unacceptable levels of risk. By this alone, it's possible and it's really clear, it's probable that risks levels are both acceptable and unacceptable if we are going to consider about their classifications. And with that, we are going to, of course, acceptable risks are to be accepted, obviously. So They have to be embraced by the organizations no matter what. But for unacceptable levels of risk, these are now the ways by which organizations would exert efforts to minimize them. Acceptable levels are those risks that, or acceptable levels of risks are risks wherein the organizations can, of course, accept them, can play with them, I would say the word, in order to be able to achieve the organization's goals and objectives without hurting that much. But for the unacceptable levels of risk, well, sad to say, they really will hurt the company. So that's why we would attempt and we would exert efforts to really minimize them. Conversely, risk criteria may include the acceptable level of risk, as said a while ago, for a specific activity or event. In this step, risk criteria may be broadly defined and then further refined later in the risk management process. So we start from the broad to the specifics. Now, tips. If you can notice, we have steps and then tips afterwards. And this time we are not going back to the slides. We're just checking the flow or format a while ago. Decide or define the acceptable level of risk for each activity. That's mentioned already. Also, the unacceptable, acceptable should be there. Unacceptable should be minimized as much as possible. The acceptable ones, of course, should be there, those levels of risks. Otherwise, we would not be enjoying the returns. Clearly identify who is responsible for accepting risk, the people who are responsible for the accepting or acceptance of the risk, and at what levels. So can we say that they are at lower levels or higher levels? And can we say what positions they're holding to, right? Are they risky? So, or riskier, and so on. We can ask those questions. And we are going to stop from there because it's now the next step. Hopefully you are going to enjoy and learn much in this particular session. Then please stay tuned for the next sessions for further discussions. Thank you very much for listening and God bless.